Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 29th of March 2020. And yesterday we published our gold and silver weekly update for the week ending the 27th of March. In yesterday's publication, we pointed out that precious metals staged quite a dramatic recovery, as did the equity markets, with oil plus the dollar suffering a little when compared with the previous week. We also pointed out that the weekly jobless figures had risen from the previous week's 282,000 to 3.28 million, and analysts are expecting a potential 4 million being declared on Thursday. Now, we stated in yesterday's report, quote, "A plethora of data, most of which is consequential. Wednesday's ADP figures will give us a guide to Friday's Non Farm Payrolls, plus the weekly jobless claims will undoubtedly worsen, and the Friday's data will be the clincher for the week," end quote. Well, this morning it appears that Bloomberg agrees with us. We shall now read an excerpt from an article they have published this very morning. Quote, "After last week's report showing an historic jump in jobless claims, all eyes will be on next Friday's payrolls data for more signs of the hit to employment, with most expecting the worst reading in a decade. Japan, Germany, Italy, and the Euro region as a whole will also release labour market data that will reflect some of the global impact. Meanwhile, data from around the world covering activity, house prices and sentiment will give more insight into the depth of the economic slowdown, while central banks in Chile and Egypt set policy. Here's what happened last week, and below is a wrap, our wrap, of what else is coming up in the world economy. United States and Canada. The March jobs report on Friday will be the first to reflect the impact of business shutdowns. But the numbers, largely based on the week ending March 14, probably preceded the worst impact, including what's in the jobless claims report due Thursday. Even so, it could still be the first monthly payroll decline since 2010. Claims are likely to show another massive wave of Americans filing for unemployment benefits in the week ended the 28th of March, following the prior week's record 3.28 million. Elsewhere, readings on consumer confidence and ISM surveys of manufacturers and service companies will show the extent of the hit on sentiment. Asia. The week kicks off with a monetary policy decision in island economy of Singapore, which uses the currency instead of interest rates as its main tool, and is expected to take aggressive steps to ease policy in order to reduce the pace of appreciation in the local dollar. Tuesday's China PMI readings for March will be closely monitored for signs the world's number 2 economy is starting to recover from its cratering in January and February. Regional manufacturing surveys follow on Wednesday. Also Wednesday, South Korean trade figures will be watched as a barometer of global commerce. Europe, Middle East and Africa. A slump in oil prices sent euro area inflation tumbling in March. Data due Tuesday will show. While a rate closer to zero than the European Central Bank's goal of just below 2% would normally spark renewed discussion about an extra dose of monetary stimulus, economists and investors, and maybe even policymakers, might just shrug off this month's reading as an inevitable consequence of the world's most fundamental crisis since World War II. The ECB, European Central Bank, and the region's governments have already unleashed measures worth several trillions of euros to support the economy. UK data on Monday is set to show mortgage approvals fell in February before the government moved to freeze Britain's housing market. GDP figures a day later are predicted to confirm the economy stalled in the fourth quarter. The Central Bank of Egypt, the Middle East's fastest growing economy, is expected by economists to hold steady on Thursday after a record 300 basis point interest rate reduction at an emergency meeting following the Federal Reserve's cut to zero. Governor Tarek Amer told Bloomberg on March 19 that the bank has, quote, the power to neutralize the effect of global turmoil on the economy, and we will use it, unquote. South Africa's manufacturing PMI on Wednesday will probably show sentiment in the sector has weakened even further. In Turkey, inflation data on Friday is expected to show a slowdown to 11.8% in March. Latin America, Colombia's central bank on Monday publishes the minutes of its policy meeting held Friday, where the board cut its key rate for the first time in 2 years. All 5 of Latin America's major central banks have reduced borrowing costs this month. And a day later, Chile's central bank meets just 2 weeks after cutting its key rate by 75 basis points, the biggest reduction since the global financial crisis, at an unscheduled emergency meeting. The government has committed to spending roughly 4.7% of GDP to backstop workers and businesses, yet policymakers haven't ruled out further easing. Unquote, end of the Bloomberg article. So next week, markets will most certainly be looking closely at the published economic data, with considerable focus placed on jobs. An important take on this, however, is that the US Non Farm Payrolls will be slightly out of date, and it is most likely that the report to be published in April will be the most impactful and insightful. This is why the weekly unemployment or jobless figures have gained in greater importance, due to their timing relevancy and producing a regular snapshot of where the economy is heading. We stated well over 2 years ago that when the world begins to face a major economic crisis, we shall see governments and central banks come together and work jointly or act jointly to ensure that there is sufficient liquidity in the system to ride the storm. This is what we are witnessing today, with it really all beginning with that G7 meeting a few weeks ago. Many have likened to what is happening with the 2008 economic crisis. And in certain aspects it's actually worse, but quite a few economists are saying no. The banks today are in a stronger position and are not as prone as they were then to a systemic breakdown. Admittedly, only time will tell, but we can see that what the world's economies are facing is a different threat, and whilst all of this stimulus will have an impact further down the road, once again we're of the opinion that the financial system will remain intact. Now we know that a number of pundits will take a different view, but then many of them have an agenda appropriate to that different view being taken. Whilst we disagree with President Trump in terms of timescale, i.e. Easter, we do agree with his sentiments that eventually the world's economies will revert back to normal trading, but perhaps at a lower level, admittedly. And there is a very strong argument to suggest that eventually the equity markets will bounce back with a vengeance. Now, we do suggest that this is a little way off. And as yet, we are at least remaining confident that no matter how bad this situation eventually becomes, the world's economies and particularly the G7 nations' economies, will survive and prosper once again. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of videos as and when they are published. We published a video on the Richard and Greg channel yesterday morning, and hopefully another will be published later today. And equally, if you haven't already done so, please do subscribe to that channel too, providing, of course, you can bear two eldish men chatting about subjects that are pretty depressing at the moment. Thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.